Thank you so much, Dave, and thank you uh, for setting up this Festival of Traders, as you always do. Today, I'm not going to talk about options. I'm going to talk about the trader's pendulum, the top habits of highly successful traders. And this applies to all types of traders, whether you trade options or stocks or Forex or cryptocurrencies. This is from my book. I'm going to show you my book. And I'm actually going to go through the 10 habits. I usually don't do that, but I'm going to go through them fairly quickly today. I know we don't have a lot of time, but this is my book in case you're interested in buying it. I don't sell it myself. You'll have to get it off of Amazon, and I don't know when the delivery date will be. So let's get to it. All traders ride the pendulum. You are very aware of the three types of pendulums that traders trade. The market pendulum, the emotional pendulum, the financial pendulum. The market pendulum is the market moving up and down. You know how that's where your strategy fits in. The markets are going to move. They're not going to go straight in the same direction. They're going to move. They're going to correct. They're going to move again. They're going to reverse. You're familiar with all that. The emotional pendulum, that's all about the emotions that we deal with as traders. When we lose money, when we make money, when we make more money, we get greedy. When we lose money, we're afraid to pull the trigger perhaps. We're in fear. These are all the emotions. I can't tell you how many traders I speak to that experience the gamut of emotions, just like I did. And really, this book is a culmination of my 35 plus years of trading. I started out trading on Wall Street in New York, and now I am a trader and a retail trader just like you. And so I've experienced it all. The financial pendulum is when we make money and when we lose money. There's no two ways about it. No matter what your strategy produces, your win-loss ratio, we are going to experience losses. We are also going to experience profits. So there is a lot to work on in our trading business, and that's what this talk is all about. How can we set up our trading business so that we are successful? Now, here you meet Farrah and Fred are technical junkies in the technical trader's trap. So they are both out of shape. They don't have a business plan. They're not making money consistently. They lack discipline or lack habits. They trade emotionally with no trading plan. They're out of shape. Now let's move to becoming an entrepreneurial trader. These two traders, Steve and Stacy, are transformed entrepreneurial traders. They treat their trading like a business. Even if they don't trade full time, you can run a part-time business. They have a business plan. They make money consistently. They trade with discipline, or they have developed good trading habits. They trade unemotionally for the most part. Nobody's perfect, and we're not into perfectionism. And they have a clear trading plan. They're in shape. So rather than jump from strategy to strategy, just bolt yourselves in and come up with a strategy that you feel comfortable with, and trade with it. And then work on the aspects of your trading, like your emotions or your profitability or your win-loss ratio. We'll get into that momentarily. So let's get started with habit number 1. Establish a trading business for the right reasons. Passion helps us achieve our goals and make our dreams a reality. We want to think big because that takes us from good to great. And when I first started trading on Wall Street, I traded currencies for a bank in New York. My idea of thinking big was to be profitable for the entire month. And I mentioned perfectionism. I think I started out as a perfectionist. I mean, I think that's something that I've had to work on my entire career, basically. But I would want to have a positive P&L every single day. And I never made it to the 20 trading days in the month, but I did come close within one day. I remember 1 month. So that was my idea of thinking big. But really, the point is that we want to, if we're starting a trading business, we want to be positive about our trading business. We want to be passionate, but also we want to be realistic and reasonable and enjoy the process of getting there. And in doing so, we develop habits to follow our trading rules and our trade plan. We commit ourselves to at least 2 years of study, and we don't quit study and back testing and demo trading and live trading with small accounts in order to avoid the technical trader's trap, which gets us back into, looking for the next best strategy out there. And I realize there are so many educators out there, so many. I mean, how do you decide who your mentor or coach, who are going to be your mentors for your trading strategy? How do you decide? Just pick somebody and who has what you want and stick with it. I mean, my expertise is Elliott wave analysis. Not everybody likes Elliott wave analysis. If you don't like it, then you don't want to work with me. But today I'm wearing my coaching hat. So I'm wearing my coaching hat. Habit number 1, there are 6 main reasons why traders get into the trading business. What are your reasons for learning how to trade? I mean, you must have your own reasons: financial independence, creative freedom, more time, work from anywhere, anytime. Although today we're all working from our homes. And for me, there's no difference. I mean, these circumstances are different for everybody, but for me, since I work from home, I'm used to this. I have my home office. Passionate about trading, self-management. These are the things that you want to be aware of, and the greater your why, the easier your how. I'm sure you've heard that before. So you really need to be very, very, when you know why you're doing something, the how becomes much easier. And then that feeds into the passion, your passion, and your dedication to this business. Trading takes dedication. Habit number 2, we're on to habit number 2, complete a trader's business plan. Now, there is a website for my book, and a companion website. So I do have a full trader's business plan in there. And actually, the book takes you through the business plan. At the end of every chapter, you have questions to answer, to fill in that. And once you're done with the book, you're done with the business plan. So what does it mean to treat trading like a business? You have to answer the 4 questions: the what, the how, the why, and by when. So what are your realistic trading goals? How are you going to meet those trading goals? What are your trading tactics or strategies? What is the why? What are the reasons for your business? And by when? Pick some milestones and time targets. If you're working on things, you gotta decide. But a business plan for me is a blueprint for success. So when you're building a house, you need a blueprint. When you're building a trading business, you need a blueprint. And you might also want to be aware that in treating it like a business, you might want a holistic approach to trading where you're not in the markets 24/6, which is really how I started out. Not proud of it, but when I first started out, I would, since Forex is a global market, 24 hours a day, I would pretty well be up all night looking to see what was going on in overseas markets, like at least for the first couple of years, until I learned the hard way and decided that, no, I need a more balanced life. Actually, it probably took more than a couple of years. Okay, but this isn't about me, it's about you. Habit number 3, define your goals. Well, these aren't really goals. This is sort of your roadmap for setting up your routine. Do you plan to trade full-time or part-time? What time of day will you set aside for trading? Like, do you have a full-time job? Do you have specific daily, weekly, and monthly return goals? What trading strategy will you employ, and what are the rules? I think it's really important to write these things down. So if you write them down, you'll be more apt to follow what you write down. And I don't advise trading while you're at work, by the way. A lot of traders that I meet with, I'm going to be offering a free coaching session at the end of this class. A lot of the traders that I meet with say, when I ask them, well, when do they trade? What time do they set aside for trading? They say, well, I have a full-time job, but, I'm looking at the markets, here and there. I just have to laugh. So not a good idea to be looking at the markets when you're at your day trade. But there are other ways of trading. You can certainly trade before your job, after your job. We'll get into a little bit of that on another habit. So also, what are your non-trading professional goals today? It's important to fit it all in with your life. Question number 6, what do you see as your greatest strength or your greatest strengths as a trader? Some traders are really strong at, analyzing charts and choosing their entries well. And they might fall short of writing their profits. So they're taking their profits too soon. But these are things that you can work on as a trader. And number 7, what do you see are your greatest roadblocks to your success? Really think about your roadblocks. Think about what you need to work on. And you can certainly manage your roadblocks. You can certainly take another route and figure it out, either by yourself or with a coach or with a mentor. I like to have a weekly trading routine. So what I tell my coaching clients is I tell them to put their trading routine in their calendar. Like, when are you going to be trading? On the weekend, Saturday or Sunday, actually put it in your calendar when you're going to be trading during the week, or when you're going to be learning during the week, or when you're going to be reviewing your trades during the week. Put it in your calendar along with everything else that you're doing, so that it's not just trading, but you balance it with the rest of your life. We're on to habit number 4. And maybe, am I going too quickly? Maybe I am. I am going quickly. Okay, habit number 4. Commit to your education with a trading coach. Have you ever benefited because you took a course or graduated from a program? Of course you have. Have you ever had a mentor or a coach? Of course you have. How do successful performers structure their learning in any field of endeavor? Well, successful performers have a coach, and they build skills by studying and learning from their mistakes, learning from their successes. And most expert performers have mentors at various points in their careers to help them learn and grow. Why? Because they can learn and grow much quicker. That's why we have mentors and coaches. Can you train on your own? Can you become a trader on your own? Sure you can. It's just going to take a little bit longer. And I'm sure some of you can attest to that. The other thing is, when you train on your own, let's say if you train for a sport, or you train to trade on your own, will you have the structures in place to keep you on track and be accountable to yourself? I mean, that's my thing. Whenever I take something on, I need to be accountable to somebody else. I just work better that way, because it's just too easy to do it or not do it, right? It's just really important to be accountable. But not everybody needs to be accountable. If not, take the quantum leap to keep yourself on track and achieve your goals as a trader. I like having a mentor or a coach because it's too easy to get locked into my own head with my own ideas. Like, I need somebody to balance or to bounce my ideas off of. Habit number 5, understand and exploit your unique trading personality. So what trading style do you prefer? There are many trading styles due to the simple fact that everyone is unique. You're all unique. Different personalities are better suited to certain trading styles. So for example, if we start with short-term momentum or day trading, if you enjoy sitting in front of the screen watching the market action, you might prefer momentum or day trading. And by the way, since some of you might be options traders, what that would mean is sitting at your screen and picking a stock and buying short-term options, puts or calls, and trading it for for an hour or 2 hours or for the trading day. That's what short-term momentum or day trading is all about through the options market. If you're trading Forex, it's the same thing. You trade on a smaller time frame. So whatever market you're trading on a smaller time frame. The 1 minute, the 5 minute, you might look at the bigger time frames for the direction of the trend. You might use pivot points, which is what I do. I'm always using pivot points. Pivot points, well, they still work. They were developed in the pits way back in the 70s, and they still work. Support and resistance, that's what they provide. So that's short-term momentum or day trading. Medium-term swing or micro trend, if you like to analyze the markets and establish your trade plan, take your time and let your trade play itself out, you might be better suited to swing trades. You might set 3 different profit targets, hold positions for 1 to 3 days maximum. That's as a swing trader or micro trend trader. As a long-term position trader, you're looking to hold your positions for a while, like at least a month if the market is going your way. So for this, you need mental stamina, patience, and the ability to ride out drawdowns. So that's the other thing. Do you have patience for this? Like if you don't have the patience for the positions and for seeing drawdowns, you're not going to be a successful long-term position taker. Why? Because you're not going to be able to hold your position. Many traders, when they first start out, they start out as a short-term momentum or day trader, taking smaller positions so that they understand the markets really, really well, and then they can grow. You can grow in a couple different ways. You can grow if you want to stick with short-term momentum or day. You can grow with just taking larger positions, or you can grow by moving out the time frame. So the medium-term swing or micro-trend trader might trade off of the hourly and do the analysis on the daily, for example, the 4-hour and the daily. The long-term position taker might do the analysis on the monthly and the weekly and take the trades off of the daily. So I like to look at 3 time frames personally. And there is no right or wrong style. The key is finding the style that suits your temperament and also your lifestyle. That's really important. Now, habit number 5, I also talk about conventional/manual trading versus automated trading. So when I first started trading for the bank a long time ago, I was a discretionary trader. Discretionary trade in the 80s, right? The markets were extremely volatile, really, really volatile, a lot of fun, but also lots of, potential moves in a day. So lots of risk, like risk taking. That's what we did. But nowadays, you can be part discretionary and you can be part systematic or mechanical. So you might program your trading platform for semi-automation. You might program your platform for pulling the trigger, for entering your trade. Or you might program your platform for exiting the trade. There might be some decisions that you want to continue to make, and that would be semi-automation. So combining both, that's really up to you. But what I would suggest is don't trade a black box system. Know what's behind it, know what's in it. Hopefully you've developed it yourself, your strategies, and you just get them programmed so that you understand what the system does. Make sure you backtest a lot so that you know what it can do, what it can't do during the different market cycles. because a system is going to work differently. A trend following system will work differently in a trend market versus a sideways market. Now, a fully automated trading system with algorithms, high frequency black box, well, high frequency is more on the institutional level, but algorithms, coming up with algorithms for formulas, you can fully automate your trading as well. I mean, that's, a lot of, most of the institutional traders have automated their trading. Many retail traders have also automated their trading. So it's really about what you decide to do. Habit number 6, follow a system. Successful companies have winning formulas and systems. So if you look at highly successful organizations, such as Amazon, Microsoft, Walmart, you'll find these companies are doing the same thing the same way every day with consistency. Okay, now there's a little bit, they're doing things a little bit differently during these circumstances, but on balance, they have a winning formula and adhere to it. So ask yourself, do you have a winning formula? Do you have an edge? And are you sticking with it? So once you develop your own game plan or system for your trading style and temperament, in order to develop confidence in yourself to follow it, you need to understand what's behind your game plan, and you need to buy into your own game plan by trading it over and over and over again. And the best way to internalize your game plan or strategy or system is to back test. I mean, I did have a coaching session today with somebody, and that's exactly, really, he was asking me, how can he become more consistent? And I said, do you have confidence in your trading system? And he wasn't able to say yes. I said, well, once you develop confidence in your trading strategies, your trading system, once you develop that confidence through back testing, you will have the confidence to follow it. Why? Because you will know what results it produces. And you want to back test it during all kinds of market cycles. Really, there are 2 kinds of market cycles. I'm an L8 wave person, so really trends and corrections, but there are various types of corrections. So that's follow a system. Your chart setup is important. If you're a manual trader, you want to know what's going into your chart setup. You want to be very clear about the markets you're going to be trading, the time zones you're going to be trading in, the time frames traded. Now, so this is more applicable to Forex. If you're trading stocks, you're going to be trading U.S. stocks. You're going to be trading during the time that the U.S. stock market is open. If you're going to be trading U.S. stock options, same thing. You know when your set times are for trading. When you're doing your analysis, some of you might just look at the price action. Some of you might dress up the chart with indicators. Whatever it is you're doing, you have your chart set up. You know how many screens you have. You know how many different things you're going to be looking at. You might want to look at the fundamentals on one screen, listen to the news, just see what's going on when news releases are coming out. And then on another screen, you might have the time frames that you're following on, and then of course you need your trading platform. So you need all these things in your trading business when you're trading. General rules are, I define those as a set of rules that hold true all the time, and some of the rules might remind you to stick to the plan. So a simple rule could be stick to my trade plan, because some of you can attest to not sticking to your trade plan all the time. And naturally, I want to veer away from being a perfectionist. So it's fine if you don't stick to it some of the time. But what you're going to find is, for the most part, if you stick to your plan, you'll be more successful. And test it out yourself. Don't listen to me, just test it out yourself. Entry and exit rules. You need to know what triggers the buy and sell decisions, and the exits include your stop losses and your profit targets. And that goes with whether you're trading options, whether you're trading stocks, whether you're trading Forex. Every market is a little bit different, so you need to understand the nuances for the market that you're trading. And it's not that you can't learn the nuances for the markets that you're trading. You can become an expert in whatever it is you're trading. So let's talk a little bit about trade management. This is also part of following a system. I think there are four strategies. Four strategies go from simple to more complex, and which strategy you choose is a function of your experience. So the most simple strategy is number one, getting in and out all at once. So you take a position, you nurture that position, you trade manage that position, and then you're out all at once. That's one strategy. The second strategy is getting in all at once and taking profits at various levels. So I call this number two, the three profiteers. I developed this for me because, again, I admitted that I tended to be on the perfectionist side, so that when I would get in and out all at once, if I would get in and the market would move in my favor and I would get out and then it would move a heck of a lot more, I'd be really upset for not holding my position. Like, I'm a great one for saying, Jody, why didn't you hold your position longer? Well, that's not the answer. You know that's not helpful at all. Or if I would get into a position and I would watch it go my way and I wouldn't take my profits because that time I thought, I would hold it longer, and then it would go to break even and then I would actually end up losing money on the position, I'd be annoyed at myself for that. So what I developed was the three profiteers, which is number two, getting in all at once, and then doing the analysis to see what the potential profit is, and then working backwards to set 2 or 3 profit targets. So that, and then moving your stops, playing defense with your stop loss, managing your stop loss. Because even if you get out, let's say you get out of 2/3 of your position, and then the market doesn't hit your third profit target, you've locked in 2/3 of your position, and you don't want to take a loss on that third position, but you do want to lock it in some profits. And that, that I really love, because I feel good about taking some profits and then watching it go down if I've been long something. Like, it makes me feel good, but I'm also managing my positions much better than strategy number one, trade management strategy number one. The third is getting into the position at various levels and out all at once. Yeah, for that strategy, you might decide, well, I'm going to get in half the position here, and then I'm going to at this level, if it goes to that level, I'm going to get into another position there. But in order to do that, you have to pre-plan it. It's not like you're going to get into the position and then double up on a losing position. You've already predetermined that it could go down below your initial entry level, and you're going to get into another position. That's fine. And number 4, get in and out at various levels. So that's pretty complex. That's not something that I do. Habit number 7, plan the trade and trade the plan. What is the difference? I've mentioned a few different terms. What's the difference between trading system, trading strategy, and a trade plan? Well, how I define it is that a trading system is a collection of trading strategies, because you are going to have different trading strategies depending on whether the market is in a trend, or whether it's at the end of the trend, or whether it's sideways. So the trading strategy includes the entries and exits based on the price action, if you follow price action, or your analysis techniques, and or your chart setup with indicators. No matter how you decide how you manage your trading strategy is up to you, whether you just exclusively use price action or you use indicators. And then your trade plan is a set of rules for when a trade opportunity arises. What are your rules are you going to stick to your rules? And it's the actual trade plan. So the rules come from your trading strategy. Your trade plan is where you enter the trade, so where you trigger the trade, and where you exit the trade. And the exit includes your stop loss and your profit targets. So your trade management strategy. So this is an example. I just thought I would put this in here, showing you trending versus sideways markets. And this is, I like looking at 3 different time frames. So the red might be the daily chart, the blue might be the 4-hour chart, the green might be the hourly chart. And you see that the hourly chart cycles up and down with the broader trend. So as long as you know that that's what's happening, you sort of want to go in with the broader trend. You want to be buying on the dip, on the smaller time frame, if you want to get in on the smaller time frame, because you're not seeing the opportunity to get on the daily chart, for example. So this just shows you the market cycles and how the different time frames cycle up and down. The hourly will cycle up and down more often than the 4-hour will in blue, and more often than the daily will in red. The definition of an uptrend: higher highs and higher lows. If the long-term trend is up, the medium-term and short-term trends will cycle through the trends and corrections, giving multiple buy signals along the way. This now this just shows you a series of moving averages. So it just shows you how the moving averages. Here, I'll just read it, so you're not reading. The hourly chart, this hourly chart highlights the moving averages that capture the broad trends in this market. When the moving averages are pointed up and separating, the uptrend is in full force and the trader can buy the dips. When the moving averages are twisted and sideways, the market is in a sideways consolidation, and it's best to wait for trend continuation before buying in an uptrend or selling in a downtrend. You probably know all that, but I just wanted to, just put it out there. Okay. I'm not sure if there are any questions. Anyway. Habit number 8, measure your performance. Really important to keep score to improve in your trading. Starting from the left, elite performers study and practice to improve in whatever field of work they're trying to excel in. Keeping score builds motivation to improve. You need to keep track of your trades and have a look to see what went well, what didn't go so well, what you can improve on. And you can measure yourself maybe against fund managers. If you'd like to measure yourself against some institutional traders, you can certainly do that. And take an inventory of your trading business monthly, at least monthly. Like if you're taking a lot of trades during the day, and then I would have a look at your trades at the end of the day. If you're taking more of a swing trading approach, then you might want to take an inventory once a week. And if you are taking fewer trades, then once a month, you can look at your business. So what do we look at in our monthly performance summary? Well, we want to, we summarize the profits. We have a trading journal to ask the 4 W questions. So during the month, we're going to write down information about the trades that we took, and we're going to fill out our trading journal. We can do it electronically. We can do it in a binder. It doesn't really matter, but we need to keep track of our trades, why we're taking our trades, and if we're successful or not. I usually use an Excel spreadsheet, and each month is a different Excel spreadsheet. And then the tabs at the bottom will be each day. So that's how I record my trades, and I can make my notes in there. Track risk-reward profile. How many trades, winners, losers, average wins, / average loss. You want to know like the size of your average win, the size of your average loss, because in the example in point 4 here, a 1-to-1 win-loss ratio is 50% accurate. So you're going to win 50% of the time. How can you improve the performance on this? You can improve your performance by increasing the win-loss ratio, right, to 60 or 70%. Or you can improve the performance by increasing the size of the win versus the size of the loss. Then you can be 50% accurate and you can still be a winning trader, right? By increasing the size of the win and the size of the loss. Oh, I think I'm running out of time now. Okay. Learn the secrets of successful traders. Why don't you pick 2 habits to work on and then commit that you learned tonight, and then commit to working on one of those habits over the next month. And habit number 10 is add balance to your life and celebrate progress. Strive to achieve a work-life balance. Trading is a journey of self-discovery. You're going to learn a lot about yourself, a lot about your personality, and then learn the entrepreneurial skills and habits to improve your trading results. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. It's my hope for you that you blossom as a trader. So we just learned the 10 habits of successful traders. Learning them will help you save time and effort, make more money, and hopefully achieve your full potential as a trader. What I'm going to offer you tonight is and the link is fxtradersedge.com/session. That's the link. Join me on a one-to-one coaching session for 30 minutes, and I'd be happy to go through your trade, what you're doing, and we can talk about next steps for you. So all you do when you click on fxtradersedge.com/session, you get onto this page and you go schedule now, and I'll have my schedule there, and then you fill in a time slot. Make sure you show up, okay? Make sure you show up. So get on the path to financial success. Let us empower you to trade strategically and invest with confidence. I invite you to schedule time for your 30-minute coaching session. During this time, we will come up with your action plan for the next month. Just click on the Schedule Now button. Well, it was a pleasure. I think it's 6 o'clock. My time's up. Thank you so much, and I wish you all the success in your trading business. And if you'd like to meet with me, just the link is there, fxtradersedge.com/session.